How about now? Is there sound? I guess there's sound. Good. Good. Hey, good morning, everybody. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Thank you, Exponation 715. In sooth, I know not why I am so sad. 20 dwarves, 20 dwarves, 20 dwarves. How about that? Hey, good morning. My name is Wayne. I'm a currency trader. Thank you for being here. This is Forex.Today, the YouTube community of more than, what is it now, almost 17,000? 16,500 people. That's pretty good because the foreign exchange market's not that big. So I guess we're cornering the market. That's pretty cool. So thank you for being here. Here's well, first of all, the raison d'etre. I'm here to teach you how to use technical, fundamental, and maybe even psychological analysis to put together trade plans. The whole point here is putting together trade plans for the rest of the week, the rest of the month, the rest of the day, the rest of the session, depending whether you're scalping, spot trading, swing trading, position carry, trading carry, all that kind of stuff. So anyways, that's the reason we're here. The methodology that you should be using would be like asking questions, taking notes, that kind of stuff. And try not to just say, well, what do you think of euro dollar? Dude, what kind of question is that? What do I think? So what do you think is more interesting? And then let's discuss it. Other things, if you don't know my methodology, visit youtube.com/fxbootcamp. There's free training courses there on how I use things like oscillators, moving averages, pivot points, Fibonacci, I think. There's a few things. So you can go there. You can read my book. The link is in the description below. But on total hit now, on YouTube, right? Whether it's Forex.Today, whether it's Trader's Way, whether it's FX Bootcamp, there's more than 6,000 videos that I've posted to YouTube or are about my work. So you have access to all of that, all of which is free, right? What are you talking about, dude? What language? I think you should fix your perception. Are you talking about to me, dude? What are you babbling about, talking about me, fool? I done no bad language. Who you are intimidating. Oh, okay. Oh, RJ. Okay. Don't mess with RJ. Anyways. So there's plenty of resources that are available to you to figure out, the methodology. Now, the interesting thing is whether you trade with the same sort of, let's say, tools or I use or completely different tools, or if you have a different point of view on trading, all that is absolutely okay. Because I think the combination of tools isn't actually that important. You can trade with tools I don't use and be successful if you know how to be a trader. So anyway, I will guide you through that process, especially in the beginning. If you're a newer trader, I'll help you figure out what you should be focusing on and not focusing on, and really kind of screw your head on straight from the beginning. And then, of course, once you know what you don't know, that might inspire you to go know it, get to know it, right? So I'm trying to push you in the right direction. So anyways, take notes. And then when you're done on the recording of this video, take those notes and document them in the comment section so you have a resource that you can search later on in life. Cool. I'd like to thank Trader's Way for being part of our community as well. You're a trader, they're a brokerage firm, so you need a brokerage firm, and they're a brokerage firm, they need traders. The cool thing is, right, they have low spreads if you're trading a variable, a fixed or variable account. If you want an ECN, those fees are half price right now because of COVID. I mean, holy smokes. All right, so they're affordable, but the execution is faster, right? Their execution speed is much faster than most. I did test that with a third-party service, well, I don't know, 3-4 years ago. And they were actually quite a bit faster than most brokers. And then What else? World-class customer service if you need it, that kind of thing. So thank you, Traders Way. Visit Traders Way in the bottom right-hand corner. There's a place to sign up for a demo account. That way you can download, you can get into your back office, download MT4, and give them an opportunity to earn your loyalty and respect. And, of course, your business. Okay. Here we are. Here is we. So I'm in a few trades, as you know, dollar and yen trades. These are things we took about 3 weeks ago. The idea is that we would have yen weakness. We would have dollar weakness. And I was also trying to teach you how to trade the political cycle, in this case, the fourth year of an 8-year political cycle. Well, now it's the fourth year of a 4-year political cycle. But nonetheless, the risk and the uncertainty are the same whether Trump wins or not. So I spent months and months and months kind of preparing you for the election and preparing you for the end of the year. And I think it went pretty good, right? Now, part of it was setting up the trade. Some of it is managing the trade. And then some of it is sort of staying with the trade. And that staying with the trade is a combination of both fundamental, meaning what the central bank said, and seasonal, meaning sort of year end, and combining the two. So there was the pre-trade, the trade of the actual election, and then there's the post-trade. And I hope now that this is the last day of November, and this is why I kind of starting with this wrap-up, I hope it was a positive learning experience, whether you learned something in the Forex.Today YouTube community or in the FX Boot Camp community in my live trading group. Excuse me. I hope you learned something about how to look forward to that political cycle coming toward us like a freight train, right? And then being in the storm. Remember, I did like a 12-hour webinar that day. And then the post-trade, and then the post-trade, the follow-on trade, right? And all that kind of stuff. I hope you took something away, and now you own something. You own a skill or maybe simply a confidence that you've been through this before, right? And that you can do this again. So anyways, Merry Christmas. So now we're entering December. Staying in the trade is so tempting to take profit. Yeah, right? So you added more positions. Yeah, that's good. The thing is, I want you to go through the process, right? Go through the process, have the experience. And then, of course, I asked you to write business plans to yourself, write letters to yourself. You know, I've been pushing you, right? Pushing you towards a learning experience. Stephen Murphy says, what profile is this? It should say scan currencies. Excuse me. Yeah. If there's a problem going on with exponential, you just, I don't know. Give him an opportunity to recover. If not, adios. All right. So yeah. So anyway, so I hope you own something now, something that's yours, a confidence or a skill that will carry you through. Now remember, this is only in the political cycle, right? This year, so let's say you have typically a seasonality cycle, and then the one that we traded, oops, that's not quite right. The one that we traded this year is not going to be the same as next year. So I really need to make that clear that what I taught you this year over and over and over and over, months and months and months and months in advance, what would happen. Now that you've been through it, just you have to write it down and say, that's the political cycle that we traded, the blue one, not the pink one. And next year we won't have a political cycle, so it'll behave differently. But 4 years from now, 2024, you now know what to do. Okay? All right. So that's good. That's good. That's good. Yeah. So let's start by me asking you what currency pairs are most interesting to you in the moment. What would you like me to cover today? And I'll do my best if I can. Maybe even a cross pair. Maybe even XRP. Who knows? Yeah, we can do Rand. Absolutely. WTI. Yeah, well, Pat. So Pat brings up WTI. Yeah. So what's going on? Well, we know tomorrow, I guess it's tonight, right? Tonight, people are rolling into the OPEC meeting. You guys on that? We talked about it last week and the week before. December 1st is going to be the OPEC meeting. And what we're looking for is an extension of cuts. Well, I should say what's priced in oil right now is an extension of cuts to supply. So if we don't get that, that'll be terribly disappointing. And even if we do get them, it still might bring oil down because we've already made that play. We already traded that. Gee whiz, when did we start talking about the OPEC meeting? It was like 6 weeks ago, wasn't it? It was like way back in October. Remember, we went and we pulled it up on the website and it was December 1st. Like, okay, well, this is where we're gunning toward. Remember, that's a behavioral finance issue. It's not what is, but what we think it's going to be because everyone's trying to beat everybody else. Right? So it's a game theory. If you expect a certain outcome, then it would be advantageous for you to make the first move. And that's why it starts early. There is, in game theory, there is a first move advantage because you can kind of figure out the other opponent's likely moves, and so you can force them into certain things or whatever. All right. La 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 la. Oh, by the way, I think I picked the first book for the book club. Over the weekend, I read P.T. Barnum's The Art of Money Getting. And it's so cool. It's so cool that I started looking out for other books that he wrote. And he wrote a ton of books. Yeah, the circus dude. P.T. Barnum. He wrote some of these books like in 1850. And oh my God, they're so interesting. It's so very interesting, so incredibly easy to read. And to me, it's almost an inspiring style. It's so easy. It might seem simple, but maybe it's not simple. Okay. Exponential 715. I've known Ron for like forever. He's like a brother, so there's no real place to complain. He demand. All right. So anyways, it's fabulously written. The advice is still spot on for today. Now it's a little more small business type book, not necessarily trading, but I thought maybe I could use it as an example or use it in like maybe we can have like a $2 trial and this could be the example book or something, but fabulously interesting. So I started looking at like what else he wrote in the 1850s before the Civil War, right? And one of them was called 30 Years of Hustling. how to get on with it, like how to get stuff done. I'm like, oh my God, this guy's interesting. And now then I started reading his bio. Not only was he a very successful business person, and he wrote like probably a dozen books, some of them like what he learned over 20, 30, 40 years of his life. I mean, it's really interesting. Like he wrote this one like 30 years of hustling, then 10 years later, 40 years of something else, and another one of 50 years of something else. So he's like collecting all his lessons of his life, sort of like Ray Dalio, but a lot less self-absorbed, I think. So anyways, 30 years of hustling. Now, right? Now, here's the interesting thing, right? Here's the interesting thing. Wait, now that I got off track. What was interesting? Oh, here's the interesting thing. We know P.T. Barnum from Barnum and Bailey Circus, right? You'll always think he's the greatest showman and stuff. He didn't even get into the circus, right? He didn't even get into the circus business till he was 60. Isn't that amazing? So I thought I'd put that on the reading list, and maybe we'll start with that one. So it's such an easy read. It's literally only like 100 pages or something, so I knocked that out in a couple hours. Then I started in Trading in the Zone, the trader psychology one. It's pretty good. And then, of course, he's added books over the years, because that was like, it's a 25-year-old book or something. And there's a few other ones which I think say the same thing but cost twice as much. But we might just start there as well. It was interesting. Okay. Any thoughts? Is that right? Yeah, Edward? Yeah, that's interesting. All right. So let's start with exotics, just because they're fun. Okay, Rand against Euro, dead. I can't trade that. Now, one of the things I've been cluing you on is in regards to South African Rand, is I don't really like it against Euro anymore, because I summarize it this way, and you know, if it's not true, maybe at least there's a message in there that provides some sort of truth. I think of it as 40% of the entire foreign exchange market is euro dollar. Okay, and that's from the Bureau of International Settlements, BIS. You can Google this. It's the central bank for central banks, and central banks are banks for banks. Right? There's a central bank for central banks. Isn't that interesting? So you can Google that and learn all you want. Or not. Anyway, so according to the BIS, 40% of everything is euro dollar. Okay? So I take that in mind. There's a general, right? Then I get rid of that and say most of what we do is set by macro trends, and a macro trend will either move euro dollar up, right, or euro dollar down. Okay? Because that's generally, it's almost like an index of the entire market. It's just such a big thing. 40% of the daily turnover is euro dollar. So a macro trend behind euro dollar will be important to everything, even if it's not euro dollar. So right now, I would then take this further and say, I don't really care about euro that much. So really what we're trading is dollar. But most dollar is against euro. And if I think dollar down, then I'm thinking euro up. and dollar down would be up for South African Rand, which means we would have this attitude on USD Rand. But because euro is going up, not because of ZAR or euro, but because of dollar down, then that would push this up more. And I don't want to be on euro ZAR anymore, or it wouldn't be my first move. Now it's nice because the carry is a little better, or significantly better, but it's significantly higher risk now than before. That's all. Okay. Well, Edward Ray Kroc didn't. He's not the founder of McDonald's. He bought McDonald's from the McDonald brothers. Anyways, so if I want, because of my macro point of view, I do want down. So I have to decide, does my technical analysis confirm this is a good time to sell this? Because that's the only thing I can do. And for this to work, I need risk on. Okay. And then, right, so I need my fundamentals to say I need to look for a risk on scenario. So that moves me here. And then if I say, yeah, okay, then the next thing is, do I have the technical trade? Okay. And the answer is yes, still, yeah. But I don't have a lot of room to breathe here, right? So, yeah. So what I need for this, okay, is something like that. So typically, you want to be here at the open. And so this would be disconcerting in that situation. If you didn't trade it at the open, then you're really getting down to business now. Okay? It's a little higher than I would have liked it. I would have liked to have kicked off of this. Okay? So I'm a little hesitant. But I'd be on a 5-minute chart here if I was trading this, if I were me. Okay? And it'd be, right? Because remember, for me, time of day is important, right? You see, time of day is important. I'm glad to hear you're working hard, Daniel. I know that you are a hard worker, so somebody's impressed. So, welcome, my friend. Yeah, Australia and China, yeah, they're going back. They're having a bit of a trade war. I think there's retaliatory tariffs and stuff going on. Yeah. So if you're trading the odd, right? If you're trading odd, yeah, you're paying attention to that. Yeah. So, in fact, my wife and I were talking about it. My wife brought it up. Right? It's great. Life at the McDonald household. Right? Yeah, so my wife says, isn't Australia and China having a trade war? And then we talked about how, yes, but there's no sort of trade war, I believe, on iron ore and coal. It's on much smaller things, much more sort of politically sensitive things like the wine industry. So, right. So, and stuff like that. So, yeah, they're working things out. Yeah. So you see what I mean? This is the right time and the right price. So if you're a bear, yeah, well, I don't know. You need to be thinking about doing something. Otherwise, you're going to be late. Okay. So, for example, right? Yes, sorry. It's been a holiday here, by the way. A few people have emailed me 2 or 3 times and they're like, God dang it, you haven't responded. I'm like, dude, I'm on holidays with my family. I have little children running around and playing with little toys and stuff like I'm like, it's holidays here in America. Sorry, I'm doing holiday family stuff. So I'll get back. So no, I'm not saying that was you. It was someone else. Like, they were very upset that I didn't give them the customer service that they demanded. I'm like, dude, it's self-service. You can do it yourself, but I'll do it for you. I just, hang on. It's holidays. So anyways, what was I going to say? Oh yeah. So yeah, I'll do that for you. I don't want to, but I will. It's one of these things. So, yeah. I'll do it for you. I'll do it for you. All right. La. It's wild to have babies in your house, though, huh? After you're almost done with that process of your life, and all of a sudden you get like a toddler in your house, and you're like, oh my God. I hate toddlers. Like, like never again. All right. So there's your upward bound move. And now you're looking for a change of trend. But remember, you're looking at it this time of day. I want to remind you, time of day is super ridiculously important. And then so that takes care of your time. Then the next thing is, what price would you expect a reversal? Okay. Right? And that's that. Yeah, Emerald, you know what? Send me another email right now, so it's on the first fold of the email list. Just remind me, and I'll get it done. I'll do it. So time and price. Do you understand how empowering your trading will become when you think this way? And that's why I think the first serious book that we read for the book club will be the one of the books by the author of Trading in the Zone, which is a trader psychology one. So I've read the first couple of chapters, knocked them out, sitting by the campfire. And he talks about, you know, the sort of how the most important part of trading is the mental part, the psychological part. I mean, that's what this whole book is about. But to me, it's interesting because some of it I feel frustrated with because maybe I have the experience already. So I think a little bit more like the way that he's trying to tell you you're supposed to be thinking, but maybe that's, you know, just my years of experience or something. But it does remind me maybe of where, or inform me maybe where some of the younger traders in the room are thinking, and maybe it'll help me explain things a little differently so that I can help you, in his words, you know, think properly, think like a winner. And I get frustrated because I say, well, I have confidence and I'm not afraid of losing money because I look at things like, well, I've analyzed the time and I've analyzed the price, right? And then, right? So I don't understand why, right? I don't understand the other side of it. Like, where would the fear come from? And so it's interesting to read. We'll have to read the book and I will learn about how I used to probably have been, because trust me, trading was not a natural thing for me. It was a very, very difficult process. So I somehow survived, probably because I'm too stupid to quit. I survived and developed the psychology that I think he's talking about. and it'd probably make me a better coach to understand how I used to think. It might make, so I can train better. Meanwhile, you might be in that situation and you're trying to get inside my head, and the book might help with that. So, I think that'll also be a good place to start. So it'll be trader psychology would be the first topic that we dive into outside of P.T. Barnum, because that's only for fun. Yeah, so, yeah, oh, that was his wife. That's interesting, Michael. I didn't know. She was interesting because she was a prosperity coach or something, or she did a little similar but different field, and I thought it was interesting. So do you want to skip his old book and get straight to that book? It's like $50 though, which is funny because, right? Anyway, so maybe we do that one. I was worried about doing the more expensive books first because I'd like to do like 20 books a month as a team. And all of a sudden, if you might have to buy 20 books that cost 20, 30, 40, $50 each. And a lot of people may not be quite that ready, right, to be involved. I don't know. I think it'd be cool to read 20 books in January. All right. So anyways, so there's that. When you look at euro, and I think Jim asked me to compare it to Eurozar, you'll see that we don't have the same. I mean, the time is still the time of day, right? But is this the same price? No. As a day trader, do I like this price? No. What it tells me is euro is strong, right? So I don't have the macro play. I only have relative strength. And I'm a macro trend trader, so that bothers me. The first thing is I need the reason. I need to know the why, not the when and the what, but the why is first. Why would South African Rand appreciate? And not just why, but why right now? Okay. And so I don't have that quite yet. So I got to be careful. And then, of course, you can see on the 1 minute it's popped. I mean, that doesn't change much. But I look here and it looks pretty aggressive. Okay. What about this one? Okay. Let me help you. Another free bonus. How to trade the Mexican peso and why it works. Boom! Okay. Look, mine's a year before Booker's. I haven't talked to Rob in years. Anyways, here's the one I did.
What got me thinking about this is I did study the Mexican peso for a while. So this was something I taught for several years for free, of course.
For free, of course. All right. So anyways, yeah. Yeah, Rob and I used to bump into each other all the time when I went to all the conferences and stuff. And we had a few side conversations, but it was interesting because only because we did this very similar things, and we knew each other's sort of pain points, right? But the greatest memory I have of Rob is we were in Spain doing a conference, and he attended my my lecture, and at the end of it, I go back to the room, and he's like, "Wow, you really gave away a lot." I said, "Hey, Rob, I gave away everything." And he's smiling and stuff. No, Booker. Rob Booker, not Rob Helene. Yeah, Michael. Since you bring it up, we'll probably do that one, I guess. Yeah, not Rob Helene. All right. All right. Lala. Okay, so hint, hint, wink, wink, nudge, nudge. This is important, what we're talking about now, for things like, timing, right? Timing and price are 99.9% of everything. But there's also flow, which is similar to seasonality. Okay? Okay? It's similar to seasonality. But it's sort of on a micro level. But there's a reason, right? There's a reason why money moves. So in my research, I noticed in someone's comments, I think they read, Michael, the book that you're talking about, The Definitive Guide to Mastering Psychology. And then there's, right, The Psychology of Market Behavior. Someone else in that comment suggested a different book on commodities and commodities trading that goes much deeper into who in the market buys and for what reason. And so, like, that's how I think we might start with that book and then go do a commodities trading book to see where it talks, I don't know, like market makers and beyond, right? And we'll see what we can learn there. Right? So anyways, so that should be interesting. This is flow, not necessarily time or price. Now the time does come into play with the flow, but it's not sort of the why. The flow, which hasn't happened, which is about to happen, is more interesting. So by flow, what I mean is I know that at least $2.6 billion is going to cross from here to here. And it's the flow. Now, I know when it's going to happen roughly, but not really, honestly. I'm now thinking about it, like, yeah, we have a general idea, but it's not a time. So it's not a timing issue. We certainly don't care about the price. It's a flow trade. So watch that video that I posted and you'll understand. So now we have a hypothesis set. And from that, you can then prove your investment thesis. Okay. So let me put this on a 1 hour and kind of take a look at where we are. Oh, yeah, that's way out of position. So I am going to put this on, I guess a weekly. So I'll put this on swing trading bearish. And that's kind of where we are now. Okay. But notice we're out of position. So let me change this, and maybe this is going to be helpful. I can go to position trading bearish. Okay. And last month we were here, and this was an obvious sell. Okay. The obvious sell right now is up here, and we're not going to get that. Not right? We're not going to get that. And even if we did, I don't know. I mean, yeah. So it wouldn't be a flow trade because this would probably take a week or two to get up here. And then, right, that would be a technical move, but it wouldn't be the flow trade. So you can, so you can drop this into a weekly swing, so a swing trade instead of a position trade, but just realize that you're really out of position. Okay, this might head down, but in this situation, there's a higher probability of up before down. Or the opposite is true. And by the way, this could be it. Let me think through this out loud. This opens down this month. So we're OP, out of position. And by the second or third week of December, we turn. Thinking about it, that's kind of what I would expect. But again, this isn't based on a flow. All right, so I might have to adjust what I was thinking earlier, which is good. So I'm going to try to be with this. Be with you night and day. All right, so if this holds, then I'm willing to trade out of position to the downside. And therefore, then I need a 4-hour 21, which we've already breached. Well, the 55 is in control anyway. So look, it's got to do it. Here's what I'm saying. Let me speak in English now, because some of you guys are like, this guy's babbling. I'm like, I never babble. It's got to do this now, or it ain't going to do it. So, yeah, I'm going to play the 20 to the downside. And it's either going to hold or ain't going to hold. Okay? Million ways to do it. That's one. Is that the right way? No. Is that the wrong way? No. It's so easy when everybody's trying to please my baby. Okay, cool. So there's our exotics. What do we want? Dollar pairs? It's so easy when everybody's trying to please my baby. So, I traded this last night, by the way, or yesterday on Sunday. I traded this, let's see, I think it was after this move, but the spread was still high. So I think I pulled the trigger, but my entry was like way up here because I think I had a 10 pip spread at that time. But whatever. And even though I had the technical setup, I just lacked confidence on it for a while. This is a perfect entry. I should be very, very bullish on this. And for whatever reason, I'm not. And so I'm out at break even or whatever it was. By break even, I typically mean like -5, -3. I don't really care. But I do want to mark when something doesn't behave the way I want them to behave, that I need to mark that as a loss. I'm not trying to have a high win ratio. I'm trying to say I need to acknowledge when I'm wrong, and I need to know that. So I'm always going to mark an exit, a stop loss exit as a losing trade. Okay. I typically won't lock in a profit unless I can easily lock in 100 pips, let's say. As a trend trader, right? I'll say, I'll begrudgingly move something for 100 pips, right? So yeah, so that's why I was explaining that, right? Why do I leave my break even is -3 to -5? Why do I do that? Because getting knocked out for, let's say, 0 was not my trade plan. Yeah, that's true, Peccary. But then I still have to pay the spread. I mean, you pay a fee, or I could have a fixed account. So, yeah, I mean, I don't know. I guess I'm just stubborn old man, right, Peccary? So I've just traded on a variable account for so long. That's what I like, and I don't care about anything else. So yeah, maybe it's time for me to grow up, right? So I don't know. But the issue here is the lack of confidence. Okay, because if I was confident in this, my stop would be like way the heck down here. Like I could have 100 pip stop on here. I just wouldn't care because, I'm not going to lose money. If I was confident, like I'm going to lose money. Oh, I see. Okay, Peccary. So, right. So like if I'm confident, I'm like, I'm not going to lose money on this, but I wasn't confident. So I'm like, I was sort of happy to get out. Like, I mean, -3 is nothing. I mean, it's just nothing. Okay, so anyways, yeah, and why would I have confidence on this, right? We sat on this for a week and went nowhere, so where do I get my confidence from? Michael says those early spreads kill the entries. See, I don't think so. I don't think so. Like if your average trade is, let's say, 200 or 300 pips on your swing trade, then what do you care if the spread is 3 pips or 8 pips? Like, who cares? Get the trade, right? You don't want to be, how is it, penny wise and pound foolish, all that kind of stuff. Like sometimes if you're trading crosses or if you're trading exotics, okay, it could be more expensive, but ultimately, I don't care. I just don't care. And I'd rather be in the trade. Right? I'd rather pay 5 pips too much, but I'm in the trade. And remember, it's only because I'm the first guy in, right? That's why the spreads are higher right at the open. Not always, by the way, but usually. And it's not outrageous in my opinion because it's what trading used to be back when I traded when it was only $2 trillion a day, right? I think it was 1.5 trillion a day when I first started trading. So spreads were wider because there were fewer market participants. So spreads are only wide at the open because I'm more disciplined. Yeah, and it cost me a little bit, but right? And then I also have my day trades and all the other stuff. And it doesn't matter. It doesn't matter. Right? It's just cost of doing business, fellas. All right. So there's pound and why I wimped out on that. Kitty cat benefiting from the move in oil. Very nice. If I go into a smaller time frame, you can see, okay, Friday front run, Monday entry, and this one you didn't even catch. This is OOP. So when you OOP, you ride the 4-hour 21, and therefore this is where we are. Okay. Maybe this was a front run for you. Okay. But out of the training course, right, this is how it teaches you to trade this. Okay. That's right out of the training course. So another way of saying it is you'd be trading it, let's say, with this template. You have enough information, right? You have enough information where you're just like, I'm riding this. That's it. Now, it's not enough information because having 200 moving averages, all 200 of the moving averages are lagging. Right? So now you got to add to that exit points. and the exit points are out in the future. They're not in the past, because then you would have already exited. So the exit points are in the future. The profit targets are in the future. And that's why I like to have, pivot points as a leading indicator, right? I like price action for entering trades, but I like pivot points for exiting trades. Timestamp. What time of day do you check daily pivots and add the swing pivots? Well, daily, so I just, it's interesting the way you phrase the question. That's why I'm stuttering a little bit. What do you mean, what time of day do I check and then add? So, that's funny. Always. I'm not sure how, the way you said it confuses me a little bit. It's like, anyways, you say time of day is important. Yes. So like go back and watch the day trading course. That's what it's all about, right? Most of it is time of day. Okay. So yeah. Go through that, Johnny. Go back and do that one again. And, right. It's all right. It's all about the Asian fade and stuff like that. Yeah, I'd do that. Yeah. I think you'll like that, Johnny. It's a good time. By the way, this is the right time of year to be refreshing and stuff, right? So yeah, Euro's been moving well. So we're 1, 2, 3, 4. We're in the 5th week now. Okay. So that's just moving on up, doing its thing. A lot of chop in that pair. I don't look at it that way, but it's a time issue. Yes, on the smaller time frames, you can see these wicks and all that. But my point here, guys, on this, I want to put a summary on some of these trades because there were reasons for this, okay? Oh, over the last 6 months. Okay, but still. Right? Do you remember talking about the double bottom? In here, we have our political moment of time, right? And we talked about this up here. I know you don't see it here on this because it's on a different template. But back in here, I asked you if you still had conviction for our trade plan going into year end. Right? I said, do you still believe the euro dollar is going to be higher at the end of the year? And most people said, yes, I still believe, I still believe, I still believe. And I said, well, it's going to start with something like this. Double bottom. Okay? So, at that time, I also said that you should write down on paper what you're going to do when you hit your target. I said it will be like a contract with yourself. that down here, you're going to think about how you want to behave in the future. And we knew that this here was an exit. That was the whole point. So when you hit your exit, what will you do and why? Write it down on pen and paper. So there's this rule. Do you have conviction? Do you still have conviction? Are you going to do what you want to do, or are you going to do something else in the firefight of battle? Are you going to trade, or are you going to freak out? Okay? And then, are you going to get greedy and lazy and sloppy, or are you going to do what you think is best? What would you do here? And what I mean by this exit is it's a monthly target. So you should already know that you were there, right? All right, cool. So how are you going to behave? Are you going to exit, or are you going to let it run until December? Oh my God, these are really big, challenging questions. I think if you took all of this stuff seriously, you had a very good learning experience. I think if you just sit and watch and lurk, okay, you might remember some of this, you might behave differently. But I think some of you did take it extremely seriously, and I think you truly went through a boot camp. Psychologically draining, but supremely serious, right? So the next thing is, if you're not going to exit, are you going to hold till the end of the year? Here's the re-entry, and we know this as a 1, 2, 3 role reversal. Perfect little thing. By the way, these green boxes, which we knew in the future, right, we knew in advance, are buy zones. So up here at 2, at exit, you also knew that where the 3 was before it happened, days and days before it happened. So down here, are you going to re-enter? Are you going to re-enter? And a lot of this we did in the swing trading group, but a lot of this we did here at Forex.Today, right? And then do you have the conviction? Do you have the conviction? Do you have the conviction? So here we are now. It's been a whole entire month. What do you think now? Yes, Johnny, and that's why, like, Johnny says front running has been my biggest learning lesson. Yeah, and that's kind of like when you said, when do I look at my daily pivots? Well, usually like in New York, I'm already on tomorrow, right? So that's part of the answer. When do I look at tomorrow's pivots? Well, by 7 o'clock in the morning today, I'm usually done for today. So like I'm long euro dollar. I'm already done. Who's going to buy it now? You're going to pay too much, right? So here's the beautiful Friday front run, right? Boom, easy, gone. So now, right, a day trader is probably going to exit, and a swing trader's waiting. And then, of course, people without plans are just going to get caught. They're trading up here, and they don't know what to think. They think it's going to go up here. Of course, it's going to go down first. And then they think it's going down. And then, of course, then it goes up. And they're just all over the place. Disaster. Okay. Oh, is that right, Kevin? Right on. Why would you be teaching us via the MT platform? I have no problem with MetaTrader. Oh, see, I don't. Yeah, so that's all. MetaTrader to me is new because I traded something before, right? I traded on platforms before MetaTrader was even invented. Right? 20 years ago, there wasn't MetaTrader. So I traded on, first it was Dealbook, and then it was Dealbook 2. Then it was Dealbook 360. And, right? The interesting thing about it is I talked to Mohammed, I forget his last name, but I talked to Mo, who was actually the developer of the platform, who went on to work at a couple other brokers after GFT, but this was all at GFT. Right? I had conversations with him. That's how well I knew the trading platform. And then it kind of got old and tired compared to MetaTrader, which was the young and upcoming platform, because most brokers at the time thought that they should have their own proprietary trading platform. So every broker had their own. And then, which means if you were one of the big boys, that was great. You could spend the money. If you were a second and third tier trading broker, remember back then there used to be like 30 different brokers you could trade with in the United States. Now there's what, 2? But those smaller firms, they couldn't afford to develop a proprietary trading platform. So MetaTrader was great because they're like, oh, we could just license this. And there were 2 things. One, it was easily customizable, so you can, like I always say, customize it like a 50s hot rod. So that was cool. But the other thing is, it was more efficient. And I used to have like 100 charts open at all times, and Dealbook couldn't handle it, and MetaTrader could because it was more efficient in the way it used. So eventually, when Dealbook went away and GFT kind of got sold out and bought out and all that kind of stuff, I moved to MT4 because it was quickly becoming more popular, and it solved kind of the problems that Dealbook 360 had, and that was, it maxed out at like 40, 50, 60 charts, whatever it was. So to me, MetaTrader is new because I've only used it for 10 years. But I used Dealbook 360, or Dealbook 2, and Dealbook 360 for 10 years. So is the next 10 years on TradingView? Maybe, but I don't really have a need for that right now. That's all. Right? So, yeah, that's all. That's all, Tyler. What do you mean easier? See, that's the funny thing. I don't find doing technical analysis difficult. Right? I spend, an hour and a half to 2 hours a day with you guys going through the charts. And other than that, I probably spend, 12 minutes a day doing technical analysis because I already know what I want to do. I mean, what analysis? Where's the big decision-making process? So again, I'm a macro trend trader. I knew back in April exactly what I wanted to do on this chart. I'm not trying to make decisions. I'm a macro trend trader, so Jay Powell told me what to do with euro dollar. Cool, so I'm done. That's the most complicated part of my decision-making process, but I was done in April. So, right? So now it's like, yeah, if it's down here, I might buy it. If it's up here, I'm not interested. Done. Like, why does it need to be easier? I don't have that need. Right? So it's easier in terms of simpler to find tools or whatever. I have everything I need. So I'm not poo-pooing on TradingView. It's just like, I don't have that problem. That's not a problem I'm trying to solve. I have everything I possibly need. Right? So for example, there's the exit. Done. I'm already done. Not complicated. I'm done. Don't need anything else. Cool. So yeah. So I'm not saying anything bad, Tyler. I'm not saying bad. I'm just not solving that problem. I have everything I need to make an informed decision. Cool. Yeah, of course, exactly. Now, if you're trying to figure things out, Tyler, yeah, but yeah, I don't know. All right, so this one's messy, yeah, but remember, I was trying to show you a lot of information, if you remember. Okay, so we go all the way back to 2016. We're playing around with this area here, right? Then we have this breakout, and then it's sort of like a 1, 2, 3. Then I'm trying to tell you back here, back in like May, I'm saying, do you think we are going to do this off of that? Okay? This is like months ago, guys. Isn't it interesting? So if you believe we're heading this way, back in the middle of the year, here we are at the end of the year, if you believed it at this time, then you would change your point of view that we had earlier in the year. Okay? This is COVID. No, this is all pre-COVID. This is COVID. This is the recovery. So now if you're up here, then you set up the 1, 2, 3. But then from that point, you have the same process. And you sort of get a mean, right? So now you could do your linear regression analysis and stuff. But the psychology of the trade, I think, is most important. Because we're doing all of this before it's going up. We're doing all of this, ahead of time. So now, with this idea of we were here and we were here, and this has been resistance for now years, will it do a role reversal and become support? Okay? Off of the double bottom, after the 1, 2, 3, will you buy this? Or maybe this is the 3 of the 1, 2, 3. 1 is the double bottom, 2 is the higher high, 3 is the reentry. Do you guys remember all this? This goes back to now to maybe the beginning of October, and now it's the beginning of December tomorrow, right? So we're talking 2 months ago. So now if this is the 3, how do you enter this? Well, you can enter it at the 3, at the role reversal, right? Or you can buy the dip, and the dip I had here, which means I was doing this while we were still here. Because this hadn't happened yet. I said, well, there's many ways that you could do this, right? I said, well, one way is you can use Fibonacci, and Fibonacci is suggesting opportunity A, opportunity B, opportunity C. So what do? I split the difference, take the 50% retracement, and say up. But most people, right, this is on a daily chart now. Most people are on a 15-minute chart, so they're somewhere, their whole career is inside of this. And what I'm trying to show you is this can go back to 2 years and show you much more of the why this would be green today. Meanwhile, traders are inside of this, inside of the noise, and they don't know why or where they're going. They just see, well, the 5/8 is pointing up on the 15-minute chart. And there's so much more, isn't there? After I explain it that way, like, oh my God, double bottom going back years. Well, why are we going here? Why would other traders buy? Okay. Kevin, I would never make that trade, so I don't want to look at it. I would never make that trade. It makes no sense to me. Okay. So that's it. I don't even want to see it. Now, maybe you have a good technical setup, but I'm not, it's not like I'm almost fearful. Not interested, but with a tad bit of fear. I don't even want to look at it. Pure relative strength. And I'm a little, this year I find I'm a little off on the Swiss franc. So yeah, it's probably trading beautifully, and I'm still struggling with the why this year. I'm just missing something. Okay. So anyways, all I'm pointing out is the plan could be quite helpful. If you expected somewhere in here, the upside of a much bigger move, you'd have a stronger conviction. Okay. And then inside of that, we can then go into day trading. Okay? So anyways, the bigger picture. It's nice though, isn't it? Up, 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 down, down, up, 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 right? Cool. So that's sort of the big move. Right? And then here's how to break it down into smaller digestible bite-sized pieces. Right? See? Cheap. Mm-hmm. Right? Nope, nope, nope. Maybe. Okay, see? Suggested buying zone with a bottom pattern. Suggested buy zone. Suggested buy zone. And then what? Right? This would have been the eye opener. Oh my God, what the? Wait for it, wait for it, wait for it. See? So now I'll zoom in even more because now we're just on a 15-minute chart. Okay? Simple day trade. See? Right at the open. It's right out of the day trading course. Okay? Took off London. Gownsy. Gownsy. Solado Club says, greetings, Wayne. Before the pivot points, how did I get out of trades? Go to the youtube.com, FX Bootcamp YouTube channel. So youtube.com/FX Bootcamp. On there, there's a free training course. And it probably talks about that in the moving average videos. Because my combination of moving averages, they measure market and they measure price and they measure outside of that trend. Okay. And you said, did I use the 200? Well, this is a terrible trend, right? The 200 trend, okay, was a trend indicator, but it was it would act as profit taking in the scenario of a counter trend trade. So the answer is no. So I would suggest go back through and do the course, right? The free course, youtube.com/FX Bootcamp, and go through that, right? Okay, Peccary says it does. Yes. I don't want to just give you the answer because the answer doesn't make sense unless you know the context of the thought process and the how I'm separating price from market, right? So to me, how you do it is irrelevant. So I don't want to tell you what moving average is, but the thought process is relevant, right? Like in this situation, I can only buy. I know that. Everything on this chart says buy. Everything. And we knew this on Friday. Okay? So all you had to do, guys, is buy this at 80. It's not complicated. You knew it last week to buy it at 80. It opened up exactly at the price, at the exact time, at everything. All you had to do is buy it. Nothing said otherwise. Cool. So how to get out? Watch those videos and it'll show. It'll be pretty clear. And then because you're measuring certain things, and you can measure them with anything you want. I got cold there. So, like, for example, with moving averages, I don't care which moving averages you use. I honestly don't care. It's irrelevant. Okay, thinking about the market properly and then having the right behavior is what's important. Right? That's what's really important. So you don't have to get hung up on which is the right combo and all that kind of stuff. It doesn't matter. Very much mechanical. All right, so let me argue with myself here, against myself. Let me play devil's advocate. Does anyone want to sell Kiwi yen? Okay. I'm long at below 70. Let's just call it 70. So I'm up 350 pips on this. So obviously I'm going to be tainted. Obviously I'm going to see it from a bullish point of view, right? So here's my entry. Okay, not the best entry. It's not even a good entry. Okay. But if you were going to be a bear, this is exactly where it would turn bearish. So this is relevant to a bull. Right? This is relevant as a bull because now our risk just went up. The probability of a price decline here has risen. What are you going to do about it? Now, you need to be able to perceive the risk. And then you need to be able to handle that risk, appropriately. Very often people don't even see the risk. Okay? So if this turns bearish now, let's say something like this. Yeah, it's going to be a big problem. Okay? And I care about it at exactly this price. Isn't that neat? So I need to see, will investors wimp out? And if so, that makes us vulnerable to bears trading against us. We don't want bears to trade against us. Okay? Who would like to know what I want? Who wants to know what I want on this and similar trades? Okay. Good setup, right? Yeah, good setup. I want this to go up for 2 weeks. And then I'm taking my money and I'm going away. No, I don't want the lower low. I don't want this to be like a standard trading month. I want to hit the target in the next 10 days and then I'm done. I'm out. Okay? Everything comes off the table. Okay? If I had 100 trades on this account, I exit everything. Now, it'd be great if it went a little further. Okay? But last year I exited my positions about a week early, maybe 2 weeks early. and the market went up another 200 pips without me. People were laughing. Ha ha, Wayne, he got out early. 3 weeks later, the market crashed, and I was already out. But that's how I did it the year before, and the year before, and the year before, and the year before, and the year before. So yeah. So what I would like is this to ride OOP. So now we need a 4-hour. I want this to ride OOP. I want to hit my target early. So 100 and 200 more pips. I want this to go up 200 pips in the next 10 days. And then adios, muchacho. Isn't it nice? Isn't it liberating to have the whole month planned out? Oh, before the FOMC and all that? Not real. I mean, none of that. I mean, it's not that complicated. Maybe it's just I have a target. See? So if I'm there, I'm done. Just done. Right? Muy bien. I'm done. Like, that's it. Good enough. Good enough for the girls I go with, huh? That's when I just take all my chips and I walk away from the table. That's it. That's right. So On says, reminded me, back in October, I had given a similar speech where in October I said up, up, up. I'm only up. It's up or not up. Okay? Look at this. And I said, I'm going to be in till the end of the year. And I'm not really targeting a price. And ultimately, even though I just said I'm aiming for this, ultimately, I'm combining now, because I didn't know that back here. I'm in it with a time limit, not a price limit. I could hold on all the way to December 31st, but tomorrow is December 1. And the end of the December is December 31st. So the one thing I am certain of is I will exit every single trade. Everything. No matter how many trades I have. Okay? Somewhere between December 31st and December 1st. Somewhere in there, I'm done. 1 year, and this was maybe 4 years ago, I told you I was going to do it. And then all of a sudden I'm doing coaching from a beach in, I think it was Saint Martin, with the beautiful waves behind me and a $100 million yacht in the background. And I'm like, look at me, right? And then all of a sudden, 3 days later, I'm on a different Caribbean island with a golf course behind me. And I'm like, look at me, there's a volcano, right? And then a couple days after that, I'm on St. Kitts. I'm hanging out at the Central Bank of the Eastern Caribbean. Beautiful barbed wire fences, by the way. Right? And I'm like, but it gives you the idea of That was before Christmas. So that was probably the week before Christmas, the third week of December. And I was already out. Oh, you know what? That year I wasn't out yet, was I? There's an interview I did at FX Street, and I said, I'm about to get out. That's right. I was still in. And I remember I got home Christmas Eve, so I cut it really close. And my friend didn't make it home in time and missed Christmas. He was in trouble for that. But that's interesting. Yeah, that's right. I was still in. And if you remember the interview, I said, I'm about to get out. I don't know if it's today or tomorrow. And it ended up being, I think, that day. Pachow, right? Just pachow. Gone. Yeah. Right? So anyways, you might want to check that interview out. I don't know where it is. FX Street. I don't know if it's on FX Street YouTube or something. I don't know.
Welcome you to what I expect to be a very interesting, certainly eye-opening.
Oh, here's an excerpt of it. Wayne McDonald on trading yen during the year.
Something is inherently wrong with the trade.
Inherently wrong. Look, you could trade like two young kids in t-shirts. Boss.
Okay, and then in terms of levels, so I mean we're 118 at the moment. That's a strong area. Plenty of offers above 118.50 by the looks of things. You're going to be buying into yen. Well, how far back do you think this has come? Because I mean we've had a huge upshoot, right? So usually, you know,
so you're saying the market's been way up.
Those spaces on the charts. Where do you think this could come back down to? And remember, we are in an era of strong dollar, fundamentally, right? Because there's a huge shortage on the offshore market of dollars, right? So we're in an environment where interest rates are going up and yields are going through the roof. So where do you think realistically the yen could get to?
Well, okay, so right now people are still buying yen pairs, right? They still want to make money.
Very clear,
huh? Money all the way to the end of the year. They want to take profit, really ideally in January. So these psychological levels are reachable, all right? And the only thing the technicals will tell you is that, you know, they finally are chickening out. Whether that means in December they need to cash out before a drop, or it's in January. Okay, but it is coming because they want to take profit. So a big psychological level is a great catalyst for that to happen, because people can just say, I'm out, right? And especially if you're like a hedge fund trader or a banker somewhere, and you have a goal for the year. If you hit your goal so that you get your full bonus, you don't want to screw your bonus up, right? So if you've hit your target and your goals, right, you want to stop.
Yeah.
Because you don't want to mess that up, right? So whenever all these things happen, but we're talking about human nature now. We're not really talking about supply and demand of currencies on the short run, as far as when this is all. It's just human nature. So if they freak out in December, my charts will tell me. If they can hang on till January, then I'm going to expect the yen strength, and when I see it, I'm going to buy yen. But here's the thing, and you bring up a good point. Dollar's probably still going to be strong because the fundamentals haven't changed. So it all begins with profit taking. So if I'm long USD yen right now, I'm going to take profit when the market does its pullback, right? The first lower low, I'm out, right? And then if you want to speculate now, because the whole thing is profit taking. That's what happens, especially the big institutional investors. So when we see that coming, great. But we're also speculative traders, right? We want to make money today, income, not just.
So anyways, it's a 1 hour interview. right? Todd Gordon was supposed to be there. Boris Schlossberg was supposed to be there. Ashraf Ladi was supposed to be there. They all wimped out. I don't know why. They were busy that day, I guess. And there I am in the Caribbean in a three-piece suit, and I'm like, you know what? I'll do the interview. So I did the whole hour interview by myself. This is just an excerpt. But so maybe it's this or maybe it's part of the other, but I go into it like, so you can see what we're talking about is all the Japanese yen pairs are up and up and up. And right before this part of the conversation, I told him I was long all the yen pairs. And either in this excerpt or in the bigger interview, I talk about how I'm about to any day about to dump the whole thing, at least for 3 weeks. But like exit, but then not only exit all my longs, short. Exit the longs and then short everything. And then I explained down for 3 weeks, and then there'd be a false rally, then it'd be down again for another month. And, so I get very, very specific. And he's still talking about, the shortage of dollars in the offshore market. I'm like, oh my God, right? That might be true, but there's more to it than that. So anyways, cool, right? And it looks cold and rainy there. It was hot.
Wealth. So on the way down, let's say through January, as I'm selling yen pairs, I probably won't sell USD yen.
Look at that. So now I'm already talking about selling everything I'm long.
USD yen will probably come down, but it's higher risk and lower reward. But I'd probably be happy to sell pound yen, euro yen without any problems, right? And if we're worried about Australia, that's going to happen next. And then Kiwi, you got to worry about Kiwi because of the higher yield differential. So, you got to pick and choose, find out what's weak at that point and sell. I mean, maybe it's Turkish lira yen. I don't know. But I'll be buying lots of yen against anything weak.
I mean, how clear is that? You have to understand. Everything has been up for months and months and months and months and months. And here I am like, I'm about to dump everything, sell. I'm going to buy all this yen back. It's like amazingly clear. He was a nice guy. He was living in Guatemala at the time. And I'm like, what are you doing in Guatemala? Anyways. So, so what I'm saying is that was, I don't know how many years ago now. I guess I should have looked that up. How many years ago? This is just an excerpt, though. It might not have been. 2016. So December 19th, right? I'm still in my trades. But by the time I got home, which was Christmas Day, I was out of all my trades. So you can go back and relive this, guys. December 19th, 2016. So I said I didn't like the Kiwi yen, but the pound yen. So let's do the pound yen. Pound yen. I'm going to have to get rid of these pivot points. So let's just do a simple. Simple. I got to get rid of these Bollinger Bands. Okay, so let's get simple here. December 19th, 2016. Here we are. So I'm long right here. And I'm like, I'm about to take profit on all my yen pairs and sell. I'm about to get out of this and then buy as much Japanese yen as possible. Look at that. Oh, look at that. It was that day. It was the exact day. Look at. Whoa, I'm going to corner the market on Japanese yen. It's been up and up and up and up and up and up and up for months and months and months. Everyone's making tons of money. And I'm like, I know I'm going to short the whole damn thing on everything I can possibly get my hands on. Isn't that great? Oh, and that's that. How funny.
Higher yield differential. So, you got to pick and choose. But I'll be buying lots of yen against anything weak.
Yeah, boy. Okay, now if you watch the full interview, I also predict this move right here. Yeah, so maybe go find that video. Yeah. Dr. H says, that's amazing. I actually talk about this, though, and that it would go up on the third week, be a false rally, and then we would drop for another month or so. So I break it down. I remember doing it in the interview. I break it down. I'm going to be short for 3 weeks, and there's going to be a false rally, then I'm going to short again, like all the way through, guys. So my point, besides being right and good looking, my point is that I'm planning the same this year. Okay? Okay? I'm planning in similar ways. And that when we look at like Kiwi, and that's not even one I'm in love with, if we can get through this, then psychologically what I'm saying is this is going to go up. And between now and the end of the month, I will take profit on my Kiwi yen. But we also know how to trade. And a proper swing trader, day trader, position trader knows that if you hit this early in the month, then there will be a lot of pressure to the downside. So now I'm combining, if we can get through this level, and I combine the next part here, and we hit this December 10th, I'll be out. That's it. Because I'm combining like how to position trade, for example, right, which is a swing trade, so you have to know how to swing trade. But based on the theories I understand, this tells me that I'm going to be OOP, hit the target early, and therefore, since I have a year-end seasonality on top of that, everything says in this situation, I'll take my money and I'll leave the table. And after that, I don't care what happens because I'm not in it. And I'm not talking Kiwi yet. I'm talking everything. Okay? Everything comes off the table and ish kaput. Okay? Now, if I have a taxation issue, then I'll try to hold on to J1 and then dump it. But that can cost. That can cost. Because I don't want to have this because I don't want to pay taxes. At the end of the day, you should love paying taxes. Okay? Well, Michael says, did that profit take in December from a monthly? Well, yes and no, and not necessarily. I mean, it comes down to ultimately price action is best. Right? Ultimately, price action is best. So if it's not making a lower low, then why should I take profit? Let it run, let it run. But you have to use the tools of your trade. So that was the 19th of December, 2016. YouTube.com/FXBootcamp. Oh, you know what? It might actually be on Trader's Way, December December 2016. Guess I have to spell December properly. Oh, funny. YouTube can't even do that. They brag about their search engine. They can't even do a search for December 2016. It pulls up all crap from all kinds of years. Might have been on the Trader's Way. You guys ever watch any of the Trader's Ways videos? YouTube.com/Trader's Way. Just seeing if they're, because this, oh, it says 5 years ago. Won't give me the date. A couple of days earlier, I did a webinar from the beach. Wish they gave dates not 5 years ago. That's not helpful. Anyway, so anyways, it was a good time. Good stuff. How Forex brokers work. Oh, that sounds interesting.
What a genius. What a gullible, what a ningao poop. All right, well, hey, good morning, everybody. It's just after 7:30 in the morning.
All right. Same names in the chat. Anyways, check it out. YouTube.com. Yeah, we can do gold. Alton says, I don't even know how to process all this information. FXBootcamp.com. Sign up to take the training courses. Most people do it more than once. There's probably 50 hours. I would start there, man. Take it slow. Right? Like, I try to give you as many golden nuggets in these free webinars as possible, but you have to organize things in a logical fashion. I can't just keep throwing you, good axioms, and one day you're going to wake up and be a better trader. You need to be trained. All right, gold. Take care, Johnny. Gold. So, up or down? Definitely down. Why? No. Not risk on. Risk on would be up, not down. Lower low, no, that doesn't tell you why. That just describes what's happening. That's price action. Anyone else going to take a shot at it? Why? Is it the bond market? No. Strong bearish market 2150. That's not it, though. That's not why. That's describing that technically, especially if you go farther out. Yes. Yes, Emerald. Seasonality? No. Central banks? Yes. What are central banks doing? Yes, central banks at the beginning of COVID bought gold and bonds to devalue their currency in response to COVID. On this day, they unwound those positions. Okay. Isn't it nice to know these things? So now you should have conviction. Okay? But you have to have proper planning and proper patience and discipline, or you're never going to be able to do this properly. Even with that sort of obviousness, many people here that trade small time frames, I'm on an hour, so if you're trading even smaller time frames, you're missing all of this information, right? So these are day trades. Sell, right? We'll put some of these through here. And you can see some of these are obviously not trading opportunities, and others obviously are. And some of them you might have taken and would have lost money. But many are not. You see? So here's the thing. The market, especially on smaller time frames, seem to be inconsistent. The market seems to be inconsistent. It's up, then it's down, then it's up, and it's down. But of course, the more you know, the more consistent it becomes. But now, if you are consistent in your trading behavior, then your results will be consistent. Maybe not the market, but the results. Okay? So this one you would have traded, this one you would have traded and got knocked out of break even or lost money. This one you would not have traded. This one you would not have traded. This one you might have traded. This one you definitely traded. This one you definitely traded. This one you might have traded and lost. Okay? This is a great top roll reversal. You definitely traded this one. That's out of position. This one you might have got, but this one you did get that one. And there's another, and then this pullback, yeah, probably. So if all you had done for this period is been a bear and only sold bearish day trades, not market open trades, not weekly swing trades, not bearish position trades. If the only thing you had done is been a bear, because you understand what was happening in the gold market, and I've honestly talked about this, like the why, 6 times probably. So it's not like something new now. But, right, if all you had done is day traded gold bearishly using simple rules of engagement from day trading in this time period, which I don't even know, this isn't even this month. In the last 3 weeks, you would have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, of which 1 or 2 might have ended up being losers. That's all right. But the majority would have made money. And again, what you're doing, or like why you're doing it, is far more important than how you do it. Okay? Will the vaccine in December change seasonality? No, nothing. Nothing changes seasonality. Okay? Alex, you have to read into it. It's not one central bank, it's many central banks. Okay? But we know the dollar's weak, so it's not the dollar. It's people literally dumping gold. Which people? Apparently people that own a lot of gold, central banks. Okay? Okay, well, Alex, ultimately I don't know, do I? So somebody is selling gold. Hoarders don't tend to sell, they only buy. Right? People that believe the currency is going to be worthless wouldn't be selling gold right now. People that are trading against the dollar because we're going to go into 5 or 6 or 7 years of dollar weakness, well, then you should be buying gold right now if that's what you thought. But ultimately, I don't know, right? I can't see who's selling gold, but there's a lot of gold being sold. And who's the biggest holder of gold? Central banks and people who rob central banks. Okay? But ultimately, I don't know. What I'm asking you to do is to say, well, maybe not today, but would you like to own gold? Thanks, Highlander. Yeah. Okay? I want you to think about not what this is, because this is past. We have talked about it at least a half dozen times. We talked about it when gold was going up and why it was happening. And then we talked about it on the way down. Okay? But what you should be thinking about now is, is this movement correct? Like, for example, let's get rid of the delete. Okay. What do you want to do with this? Do you want to own this in the future? And at what price would you buy it? That's all I care about. Well, when Iraq fell, right, the central bank was looted. And then when ISIS, after the Americans left, the central bank was robbed again. So I think it's uncommon to rob a central bank. Now, I read somewhere years ago, a central, I think it might have been the Fed. The Fed got a fax from like the Central Bank of Nigeria or something. Like, it couldn't have been because that was so obvious, but something like that. A small central bank off somewhere in the world. And it comes from, quote unquote, a central bank phone number. And they ask very formally, in the proper way, with the right language and messaging, that the Central Bank of Nigeria would like to remove, $200 million of their currency. And it should be, was it Thailand? And that the money should be wired to this account. And so, the intern, the college intern at the Fed said, okay. And they wired the money. No joke. Yeah. MT104 for 300M. Yeah. No joke. They wired the money. And you could just see like the kids sit looking at each other like, oh my God, our account just went up by $300 million. They actually sent it. It was probably just a couple of gamers, right? 17-year-old hackers. But anyways, they got the monies, and they literally robbed the Fed of hundreds of millions of dollars. Isn't that amazing? So can you rob a bank? Yeah, it's easier to just make money. Yeah, so the question is here, if dollar's weak, then you would expect gold to go up, right? Yeah, so right now dollar's weak and gold is falling, so it's not a dollar play. So if you're going to be a boss, ladies and germs, you need to be the one that says, okay, this is going to go up, and I can give you 9 reasons for it, and you are going to start buying at support. In particular, once you see a bounce at support and a reversal at support, then you're going to be going like gangbusters buying this. But I don't know if that's what you want. Most people only see this. I have too many clicks. Most people only see this. Okay? Just this. They're just looking at this. Not even, maybe even this. Like, this is all they see. And I'd rather you make a determination and say, well, as a professional investor that's analyzed this market, the gold market as a micro issue, but global trade as a macro issue, and you've made the determination that although price has been falling for the last couple of months, that it is indeed the wrong direction, that this is indeed an opportunity to buy. And now, as a technical analyst, you are looking for things like, well, if this is a key level of support, which I'm not saying it is, but if it was, and you saw a reversal pattern, you would start buying. I don't know if that's true. I don't know if that's your investment thesis, but that's where I'm trying to get you, that at some point, you don't look and see what's happening, and therefore you make a determination. I want you to be bigger than that. I want you to be the market maker. You don't take prices, you make prices. Did the kids get caught? I think the Fed, after scrutiny, admitted that they sent the wire. But did they get caught? I don't know. Right, so there's no support yet. Exactly. So now you need to do your job. I'm not saying that that's my thesis. If you listen to me, you're depriving yourself of your destiny. So don't listen to me, listen to my message. You need to be the one that's doing the work and see that there is an inefficiency in the market due to central bank action, if that's true. We don't even know if that's true. But if you've determined it's true, you can say, well, central banks don't give a dang about market efficiency. They don't even care about price. They're trying to devalue a currency, or in this case, strengthen a currency. So if they're driving up the value of a currency, they don't give two hoots about the price of gold. So you might say, well, you understand what the central bank's doing, and at some point they will be done. You get it? And when they're done, you will be ready, willing, and able to buy this market at a low price. And then you should be able to give 9 reasons why you think gold will go up in the next few years. Gold up and US dollar down. Okay? And so when do you start buying? I don't know. I have no idea. Couldn't tell you. But I need you to have your investment thesis and the research to prove, and then the capability of carrying it out. And if you can do that, you're well on your way to becoming a professional trader. Very, very significant player in the market. Or you just, skippy scalpy around and, right? Pick up your pennies here and there. Spend it all at Starbucks and at Best Buy. And never build any wealth. So it depends on what you want. I want so much for you. I want you to succeed and grow and be big like this. The world is yours and you're like this. I want you to be big. I want you to be the player. Okay? But from that, you're going to have to do the big girl work. You're going to have to do the research, and that research will not only give you a thesis, but give you the conviction to actually do what needs to get done. So throughout the month of November, I've been talking about conviction, fortitude. And you get the conviction, you get the fortitude, you get the strength because you did the work better than anybody. Okay? Okay? Let's see. So I'm at 1,900 pips right now. I'm losing $8 on that Mexican peso, though. Better make sure I got the conviction. So I'll probably cross 2,000 pips. And it's only, 6 trades or something? It's nothing. Nothing. Right? One of the challenges I gave to the swing trading group is that you would have dozens and dozens of trades open. Right? This is only, I won't count the peso because that's just for fun. 1, 2, 3, 4, 5. It's only 6 trades. Is it difficult to scalp 2,000 pips in a month? By the way, I was up 1,000 pips before the election. And those are the 2,000 pips after the election. But is it difficult to scalp 2,000 pips? And if so, and if it's reasonably possible, okay? If it's reasonably possible to scalp 2,000 pips, how many trades does it take? Ron has only 19 open. Good job. I mean, it's a start, right? You wanted 30 by this time. And that's the shortened cycle, right? And Ron, how many pips, if you don't mind me asking? How many pips? So my point is scalping would take you hundreds and hundreds and hundreds of trades. It would take every waking minute of your time, right? Where I probably made 100 pips while we did this webinar, and I did nothing. Right on. How many for you? So Ron's got 8,000. Good job, Ron. So imagine if you were at 30 trades, right? Imagine if you, like I said, having more than 100 trades open is an amazing experience. On's up 7,000. Good job. Good job, guys. So now you have to make these decisions, right? When do you take the profit? How long can you let it run? Can you get to the 19th of December? Do you bail on the 10th? That kind of stuff. Like how long, or do you walk, right? Yeah. So knowing the fundamentals, knowing the macro, knowing the flow, knowing seasonality, knowing political cycles, be able to take all that knowledge and then plan things technically. Oh, I don't care about the 19th. I just mean when it's time, you have to decide now. Okay? But all of this, guys, comes down to taking all this knowledge and then simply putting it together in trade plans. Okay? Well, actually, that's a dangerous thing. So On says, let's go for 10,000. No. Don't even think about that. Don't think that way. Because now you have a psychological attachment to a number of pips, which could mean you don't have the wherewithal to get out before the 10,000 because you're attached to that, or you get out because it's 10,000, but it might be worth 20,000 and you just bailed everything because you hit a psychological, right? Like, don't even think that way. Don't talk that way. I know you were joking, but don't even joke that way. You are going to be in the trade until it's time to be out of the trade. You don't even know what price that will be. You don't know what time that will be. Now, with the seasonality attached to this, we have a general idea of thinking about probabilities, right? And so the longer you're in, the more probability that we will hit a top. But it might be January 3rd we hit the top and has nothing to do with the 19th or whatever, right? So don't even think, right? Because first of all, if you're in 20 trades or 30 trades or whatever, it doesn't, like the 10,000 is meaningless because it doesn't dictate whether those trades have hit their targets, nor does the rest of the market participants see your 10,000 pips and then dump, like, oh my God, look, right? So it's really, truly irrelevant. Except to our mind, we have this psychological response. But don't think that way. Don't think that way. I'd rather you look at your charts and say, well, okay, the Kiwi's at a point where that looks like it's done. Okay, bail on that one. Take one or two, take that off and put that in the account. And now you only have 18 trades on, right? And then look at another one. Oop, this is hitting its likely top. And try to be as logical and strategic as possible, right? Just think of it as doing the job. Just do the job. Be done when it's done. What happens next? Who cares? You're not in the trade. Why is that relevant? Okay? Right? So very good. So I'm glad I showed you it's possible. So I think most newer traders, right? Most newer traders don't even know that that's the game they're supposed to be playing, right? Like I keep getting emails about another professional group that they've made like 200 pips last month, and they've been doing 100 to 300 to 400 pips month after month after month. And like, I guess that's supposed to be good. And so if you get caught into that message of like, look at us, we're professional traders, we make 200 or 300 pips a month. I find that frightening. Like, that's it? We do that in a day. That's your month? Like, it's frightening to me. Because the only way you can make money now is to have very large lot sizes. Because now you're like, I made 20 grand this month. Okay, well, how many pips is that? Well, I made 200. You made $20,000 profit on 200 pips? Like, oh my God, you're trading millions of dollars. Which, right, you're like, oh my God, that's so scary. You're way over leveraged. It's the scariest message ever. Oh my God. Where I can say with mini lots, right? Mini lots producing thousands of dollars a month, then that's cool. Mini lots. but you don't know until you know. Right? You don't know the rules of engagement, but once you know, I think it opens up a whole different mindset. Once someone has shown me something, then I latch on, right? Like I see it, I'm like, I see the light, right? I see the light. And I'm like, okay, now I know I can do it because I saw someone else do it, and I can do anything, right? In my mind. It's not arrogance, I work harder than most, right? My son and I were actually having a conversation. I'm looking at a side investment, and I've done so much work on this. And he's like, Dad, like, what's the likelihood that this deal is going to come through? And I'm like, not very good. First of all, the person that is going to give me the deal has to decide that they're going to lose lots and lots and lots and lots and lots and lots of money by selling to me, because it's the only situation in which I will buy. I'm like, so they have to go through psychological changes, son. Like they have to, right? And if they're going to be emotional about it, they would rather lose everything than 70% or whatever, right? So I have to get them to a situation where the deal will only work in almost impossible circumstances. But he's like, but you've done all this stuff and you've spent all this money and I'm like, well, I said, well, that's what I do. I do more than everybody else. And that's just the consequence. A lot of the time the deal doesn't go through because someone dumber will just buy it, and they may not have done the same amount of work. So they might get lucky, or they might get unlucky because they don't know what they're buying to the degree that I do. And I said, if it doesn't work, right, then it doesn't work. But the preparation is where you should excel, son, right? The preparation. Being more prepared by working harder and being smarter. And now anyone that has, let's say, more money can just come in and say, oh, that looks like a good deal. I'll buy it. Where I'm trying to get something beyond that, right? I'm trying to be smarter, but the consequences, I missed the deal, but someone else is going to get it and not be prepared. I will be fully prepared, right? And so it's like trading, right? It's about having the conviction through preparation that will address this psychology issue. And that's like, we're going to read this psychology book on trading, and I don't know what it's going to say, but I know that's the way I addressed my own, in the beginning, psychological challenges in the beginning, right, that I had, by saying, okay, I don't know as much as a professional, right? This is me 20 years ago. In fact, I don't even know what professionals do. Like, I don't know anything. But the thing is, whatever I do, I will be most prepared for that. That's how I will battle the uncertainty and maybe the inconsistency. I will then become consistent through the planning. The planning is going to be the thing that protects me. Right? That's the most important part. And then I realized if I do all that work, I have to make more money. Because the days of making 50 trades in a day are long gone. I used to make 50 to 100 trades a day sometimes, right? And I'm like, okay, I mean, I was making money, but it's hard and it's stressful and time consuming and stuff. And I instead focus more on having this plan, being prepared, trading in only very certain circumstances when I have sort of this upper hand, and the preparation was worth more. So then I started like journaling and stuff, and anyone that read the book understands this concept, where I started looking at my trades that are making good money, right? Like day trades, swing trades. I'm like, damn, this is making most of my money. And then I was making, depending on the month, of course, good or bad or mediocre, depending kind of money on let's say, scalping and smaller trades, right? It was all right. But it took a lot of my time. But the journaling is what set me free, because I don't mind spending, like, again, if you read my book, you understand the intensity into which I journaled, right? So I don't mind spending, 4 hours a week going through my other trade, my what I now consider good trades, right? Going through those trades and journaling them and reliving them and re-executing them and reanalyzing them. And because they're making, 100, 200, 300 pips or whatever, right? But then all these other trades, the 20 pip winners, the 15 pip winners, the 20 pip losers and all that kind of stuff, it took so much time to journal those mediocre and losing trades that I just didn't want to do it anymore. Because not that it wasn't okay money. The thing is, it took so much time to make those pissy little trades, but also there were more times when I lost money, right? Because there's no real trade plan. It was easy to lose 20 pips, right? But then ultimately, the thing that changed my behavior was it took me 8 hours to journal my pissy little trades and only 3 hours to do my good trades, my bigger trades, that I realized it just wasn't worth my time. I wasn't willing, because I'd start to take a trade, then I realized it was going to be a pissy little scalp, like maybe I get 20 pips out of this. Then I'm like, oh my God, it's going to take 20 minutes to journal it, even though it only takes 20 seconds to take the trade. 20, right there, there was now a consequence. The consequence was bigger and more important psychologically to me than losing a little bit of money or making a little bit of money. You understand? Like, ultimately, making a little bit of money is not even that exciting. But what the real challenge was, it would take 20 minutes of my time to journal it properly. I'm like, but just for that one trade, well, if I made 8 trades like that, or 10 trades, like, well, it's going to take me 200 minutes to just journal it. For what? What am I going to make out of this? Some winners, some losers. So at the end of it, I make $120 or something or whatever. And I'm like, I'm making like minimum wage on this stuff because of how much time, not that I'm trading, but how much time I'm doing journaling. So I'm like, well, I got to make better than minimum wage. So I just stopped doing the pissy little trades. Even though I'm capable of doing it, ultimately at the end of the day, it wasn't worth the time, right? You're like, all right, there's how much I made. Right? And you're like, it's not worth it because you could spend all that time and lose money. And I'm like, you know what? Why don't I focus on these other ones where I spend the vast majority of my time setting up trades, but once I take the trade, because they're so certain, not like so certain to make money, but I'm so certain in their outcome, is that they're just worth more. So I make the trade, I wait, and then I go click, and now I'm like, I'm going to make 300 pips on this. Versus having to make, 300 pips on scalps, well, if they're all 30 pips, I'd make 10, but, it could take 25 trades. Versus like, click, done. The next day you come in and you're like, oh, I better move my stop to break even. Break even. You're like, all of a sudden now, the time that you're doing, like there's no busy work. Do you understand? Michael, you have to be open to all opportunities. You see what I mean? So that's why it's important that you let your winners run. Your trading has to be worth the risk, right? So they're all over 300 or 400. So I got you now through the entire month of November. I tried to open your mind and your eyes and your heart to the idea of being bigger, thinking bigger, making big decisions. I've asked you to write contracts with yourself so that you're psychologically prepared. all that kind of stuff. We talked about the election for months and months and months and months and months. So now that I'm wrapping up this last day of November, that's done in my book. Okay? Meaning I'm done teaching that for now. Like that it's over. And there's no psychological or emotional attachment to anything. That's done. I prepared you for months in advance. Then I got you ready as it was about to happen. Then I did a 12-hour webinar while it was happening. And then we were able to get our new trades in. And then I prepared you for the exit and all that. And then the re-entry and then letting it run and all that kind of stuff. Right? And between, with the swing trading group, dozens of people have said that they got thousands and thousands of pips. So it's done. November's over. Tomorrow's December 1st, and it's just done. Okay? That lesson's done. Doesn't mean the trades are over, but you need to do what you're going to do. Okay? I got you set up for November, got you through November, right? Got you to the end of November, and you either learned or you didn't learn. Okay? So now we'll have to have different foci. Okay? So if you like that kind of stuff, you definitely need to be in the swing trading group. To be in the swing trading group, you need to go to fxbootcamp.com, sign up for the training courses. That's that. December's going to be a little different. January is going to be completely different. February, March, April, all going to be different types of months, all that kind of stuff. So we are transitioning out into a whole new world. So if you are now suddenly up thousands of pips, you need to also tell yourself you don't know everything now because of that. Everything is about to change either tomorrow or by the end of December. And then that's it. And we go into a whole different world, different markets, different part of seasonality, different political plays, lots of different stuff. Okay? So I kind of feel like, I know it's not over, but I feel like George W. Bush up on the aircraft carrier wearing his bomber jacket, and behind him it says, "Mission accomplished." Like, really? The war in Iraq is over? The war in the Middle East is over? And are we getting WMDs? Like, is it really over? Aren't we still in Afghanistan? And 20 years later, you're like, whoa. Right? So, yeah, it's not over, but I'm maybe done teaching on that, and I want to move on to new subjects. So now you know how to do this. You're an expert. Okay? Or you keep coming back and I'll keep doing webinars, right? All right, cool. So I think that will be a wrap. I didn't go through the calendar today, so my fault. Perhaps tomorrow ask me to go through the calendar and we'll do that. That should be a Monday thing. I just forgot. It's been 2.5 hours already, so I apologize for babbling on, I guess, today maybe. But anyways, I hope it was interesting. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you Tuesday, Wednesday, Thursday, and Friday of this week. So make sure you subscribe. Please click the like button as well, because it just simply tells YouTube this is quality content. And lastly, please, 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 please document what you learned in the comment section below the recording, which will be available in probably 6 minutes. So peace on earth. May the pips be with you. May our profits be above average. Thanks for being part of Forex.Today. Cheers.